Hello and welcome to FountainFX on Friday the 14th of March 2014. If you recall yesterday around about this time, this nice red candlestick in the middle of the screen where my cursor is, this is at the point where positive news on the US dollar was released and price started to fall. There was a pullback, and but the precise moment when the news came out was at the bottom of this candlestick. So price pulled back and then continued in the downtrend, I suppose, as the positive news was digested or impacted on the market. However, we were looking at an area of support here previously, another area of support below here, and finally an area of support at the bottom here down at the 138.50. And what's happened? Price gained so much momentum that it just broke through the first area of support, the second area of support, and it was only at 8 o'clock last night when it got down to the 138.50, and probably also because it was at the end of the trading day for the New York market, that price found some support and we got some reversal in the direction of the pricing. So how could you have traded this? Well, if you'd have taken a calculated risk and placed a buy order around about the 139.30, you would have lost out. You'd have been stopped out. Had you placed a controlled risk of, let's say, 10 points, you may have lost 10 points. However, seeing that the price was pushing down and there was a nice big gap between this support area and the next support area, i.e. this big long candlestick, perceive it or see it as a gap, shall we say, the clever way of trading would have been to then place a sell order, because obviously price is not going to reverse at that point. So go with the trend at the time and sell, and therefore you'd have been triggered into a sell order around about the 139.30, and from there it's gone all the way down to the 138.50, a nice 80-point gain. So you would have lost 10 points but then gained 80 points back. How can you trade that? You could go down into smaller time frames, run a trend line. If the trend line gets broken, then you get out of your trade, that kind of stuff. I can go into those kind of strategies in a bit more depth later on. Guys, if you've got any questions, etc., by all means ping us emails. I've had some questions around brokers and other bits and pieces, which I will be answering soon. But once we got to the bottom here, the 138.50, we can see that price then pushed back up. Now that didn't give us the ideal entry point, but the entry point came this morning off the European Open at 8 o'clock, where price pushed down back into this area of support. Previously here we can see where price has pushed away from, and the fact that it came back into it is not necessarily confirmation that yes, you should buy automatically, especially if you've just been whipped out of this trade at the top here, the 139.40. So waiting for confirmation. What do you do here? Well, it's a good area of support because we can see that previously price rallied quite strongly out of this area. When it was last at this area of 138.50, it pushed a good 60 points upwards before it started to consolidate and go sideways. So it's a very valid area in which to buy. So what happens? Price falls down. We've got a degree of momentum coming down into it. Now, for confirmation that it is a turning point, we want to wait until the bullish candlesticks consume the bearish candlesticks. The red one is a bearish candlestick. The blues are bullish. So after the second candlestick, that closes above the bearish candlestick, and that is your confirmation that this area of support is valid. Now you could, if you want to minimize your risk, so in other words you place your buy order down here at the 138.50 with a stop, let's say at the 138.40. If you go back and look at these wicks, you might use them as give you a good idea of area to go down to, so 138.40. So at that point you wouldn't have lost anything, you'd have been triggered in, and at this point here you'd be like 10-12 points up, rather than waiting for confirmation and then enter when you're sort of 10-12 points later on. So it's two different styles of trading. You can just place the trade there, but having placed a trade up here, you may have been feeling a bit nervous, having had your fingers burnt. But the point is that we've got confirmation here. We have a doji We have buying pressure, that's why we have a long wick, came down into this level and it pushed up. So that's other things that you need to look at. Previous area of support here where price rallied quite considerably from this area. And then we have price moving with momentum back down into this area at the European Open. So all of those things come together to basically say good area to buy. But if you're conservative and you wanted to wait until this bearish candlestick was engulfed, we would have bought at the top or the close of this second bullish candlestick. So around about the one, if I just take a quick look, what was the open there? The open was the 138.65. So there you go, 138.65 is where we would have bought at. Price is now up at 139.24, so we are talking 60 points above. So if you've run 60 points today, you must be quite happy in terms of your trading and very pleased with how the market's performing. But what we're showing here is that often the best way of entry is not to jump in, but to wait for confirmation. If we look here, that price pushed up from this level here after the doji, which was at 8 o'clock last night, and then price came back into it. So what did it form? What was the pattern? It was a double bottom. So price touched it, pushed away, came back into it, and then has rallied out. Once the volume with the European Open has come into the markets, then pushed it steadily higher. So that's really the things that you need to be looking for in your trading. And happy trading from FountainFX. I'll go into other strategies in more detail as we go through the course. But the real thing is that despite everything you can learn and read in books, nothing can replace the time in front of the charts to be able to practice good habits and break bad habits, and therefore improve on your performance by looking at high probability entries. Thank you very much from FountainFX, and Leka Naviek.